Ever wondered how to navigate the high seas of the stock market with precision and confidence? Today, we delve into the world of stock orders, unraveling the intricacies of market, limit, stop loss, and stop limit orders. First on our voyage is the market order, the most straightforward of the lot. A market order is a request to buy or sell a stock at the best available price. The key advantage here is speed. When time is of the essence, a market order ensures your transaction takes place, though the exact price may be a bit of a wild card. Remember, this order type might not always fetch the best deal, especially in volatile markets where prices can change rapidly. Next, we have the limit order, a slightly more nuanced approach. A limit order is a request to buy or sell a stock at a specific price or better. This order type gives you control over the price, but patience is key. There's no guarantee when, or indeed if, your order will be filled. However, it does offer the comfort of knowing you won't pay more or receive less than your set limit. Our third type of order is the stop-loss order. Think of it as your financial safety net. A stop-loss order is designed to limit an investor's loss on a position in a security. Once a stock reaches a certain price, the stop price, the order becomes a market order. It's a preventative measure, cushioning the blow if a stock's price takes a nosedive. Last is the stop limit order, a hybrid that combines elements of the previous two order types. A stop limit order becomes a limit order once the stop price is reached. This offers more control over the execution price, but like a limit order, there's no guarantee the order will be entirely filled. In summary, market orders are quick and easy, but offer less control over price. Limit orders give you price control but require patience and offer no guarantees. Stop-loss orders serve as a safety net, transforming into market orders once a certain price is hit. Finally, stop-limit orders provide control and protection, becoming limit orders when the stop price is reached. Navigating the stock market can be a complex journey, but with these four order types in your arsenal, you're well equipped to chart your course. Remember, each order type has its strengths and weaknesses, and the right one for you depends on your investment strategy and risk tolerance. So, take the helm, set your course, and let the voyage begin.